On August 20, Tesla announced a stock split of 5 to 1. The change took place on August 31, 2018. Before the split, Tesla shares were worth $2,230 each. On August 31, they were only worth $446, which is much more reasonable. People who owned shares before had only one share, now they had five. When Tesla announced the split, sales had grown 6 times in the 5 years before. By the end of 2019, total sales would have grown from $4 billion to $24 billion. The business has made $4 billion, up from $924 million in gross earnings. At the same time, Tesla's more expensive cars went from making up 17% of all vehicles made in 2019 to only 15% in the first quarter of 2020. On the other hand, production of the Model 3 and Model Y went up by 3 percentage points. In this movie, we'll look at what we know about the stock split from other sources. In 2022, will it happen? When did the split happen exactly? Check back to find out. People split up their stock to show how goods could be made easier to get. Aside from letting investors with small amounts of money join, it also gets buyers excited who are looking for a cheap luxury item. Tesla got investors by lowering the bar for entry while keeping the same high standards. This gave people who were on the fence more reasons to buy than before. It caused a chain reaction and was a great boost for business in China. The Model 3 got good reviews and quickly became the most popular electric car. In the same way, when the Model Y first came out in the US, it caused a huge demand spike that was much bigger than the demand for the Model 3. Lastly, the stock split led to the idea that Tesla products are cheap, which caused demand to rise, which was good for both the company and the stock price. Last summer, when Tesla stock was worth about $1,300, Elon Musk thought it was too expensive, and that more people should be able to buy shares. As soon as that news came out, the stock split 5 times for 1. After 15 months, Tesla stock is getting close to the same level, again thanks to a huge gain this year. However, this has led to more rumors that Musk will open a new stock section for regular investors. There are different opinions among experts and investors about the rumors. Even though investors want a similar split to happen soon, some experts say that Tesla's prices don't make sense. Tesla is worth more than all the other automakers put together, but at its present value, its price-to-earnings ratio is 50 times higher than any other company. To catch up, Tesla would have to stay in business for another 20 to 30 years. To add to what we already said, experts think Tesla will need to sell 31 million cars by 2031 to make its price tag make sense. Using traditional methods to value a company, on the other hand, is not possible when comparing Tesla to Ford and Toyota, which make cars. The other point of view says that Tesla should include intangible assets like its name, patents, and goodwill in its measurements and price predictions. The claim is that Tesla is really a tech company pretending to be an automaker, and that Tesla's data has a huge amount of value because it can be used for AI, software services, and other things. Tesla is telling investors to ask questions during the Q4 results call. Tesla will answer the most asked questions from investors. More than 10,000 investors, or about 1.4 million shares, have already asked questions and cast votes on them. The questions that are asked most often are about free cash flows from capital expenses. Many small investors think it will be hard to buy Tesla stock for more than $1,000 this quarter because of the stock split, the launch of the Cybertruck, and the quality of Tesla's customer service as the company grows. Focusing on making more cars is what Tesla is doing. Tesla is promising that they have enough cash on hand to keep manufacturing going, even though they expect sales to grow by 40%. Officially, the company says Tesla made 305,000 cars and shipped most of them. The EPS is expected to be $2.35, which is about twice as much as the EPS from the previous year. It's expected to bring in $16.65 billion, which is 55% more than last year. It's clear that Tesla's 5-for-1 stock split was good for both the company and its owners, and it's also clear that Tesla's market share has reached the same level. This is because it has more sales, makes more money, and gets respect for making innovative products. Even though this doesn't always happen after a stock split, the fundamentals of the business determine the conditions and price action that do. Tesla was able to make a lot of money because its goods and stock are liked by both retailers and regular people. Some experts support a share split just because it's a good marketing move, and giving executives more shares could help them get paid more, even though the idea that shares are cheaper is based on perception rather than reality. Analysts say that investors are interested in buying shares when the price is lower. Tesla's stock price will go through the roof, and any split that happens soon will be good for it as long as the company stays true to itself and stores trust the brand from the start. It is very important to know what a stock split is. The most important thing to keep in mind is that this does not increase the wealth of buyers or give the company whose shares are being split any more money. A stock split is when one share of stock is split into many shares that are all worth the same amount of money. Similarly, cutting food into 4 or 5 pieces is similar, but the meal as a whole stays the same. In the same way, company ownership doesn't change before or after a stock split. There are many reasons why companies split their stock, and one of them is to make it easier for individual investors to buy shares. In theory, this makes the company's shares more liquid and open to more investors, which should raise the price of the stock. However, this doesn't always happen. Elon Musk has more than 64 million followers on Twitter right now. Besides that, all of Musk's companies have big online followings that can't wait for new things to happen. A new idea called the 12-9 hypothesis has been going around on Tesla Twitter. Supporters and investors of Tesla have said on Twitter that the company is thinking about a stock split, which led to the 12.9 idea. A recent stock split at Tesla on December 9th sparked the idea. Elon Musk tweeted on May 1, 2015, that the price of Tesla stock was too high. That same year, Tesla announced a 5-to-1 stock split, which caused the stock price to skyrocket because $20 has become worth $79. Musk put something on Twitter, then Adam HUF did some number magic. He added 422.69 to get 489, then added the first 2 digits again, 4 plus 8, to get 12, and then left the 9 alone. The result was 12.9. The idea Adam put forward was probably just a joke, but Tesla Twitter loved it and ran with it for 12.9. With everything Musk and Tesla do, some Twitter users think it wasn't just a coincidence that Musk sent a secret message to his followers to tell them about the stock split. The 12-to-9 hypothesis starts with this to try to guess when Tesla's stock will split in the future. The theory got its start with a joke that Elon Musk told about his 2 favorite numbers, 20 and 69. Some of the details that supported the idea were so specific that it started to make sense. Elon Musk, on the other hand, shot down the idea at a recent CEO summit put on by the Wall Street Journal. The host asked Musk what would happen with Tesla on December 9th, and Musk said, "As far as I know, nothing." Musk also said, "I have no idea where this came from. This is one of those memes that I have no idea where it came from. However, I'm not aware of anything that could happen." Finally, Musk's words put an end to the 12-9 theory. But as Musk says, fate loves a good irony. We will be on the lookout for anything that does happen to Tesla on December 9th, no matter if the company is split or not. Ed Moya, an analyst at Awanda, thinks Tesla's chances are better now that the company has said it will sell cars to Hertz and Uber. Uber said that other rental companies around the world will probably be able to speed up these kinds of orders. He says, "I was wrong when I said $1,000 wasn't going to happen. Tesla's rise has been very fast. They were better able to deal with the lack of chips than their rivals because they were able to change. Some people say that the stock's price is too high. The stock's speed does. The business will do better with a new split, and Moya thinks it will reach $2,000 soon. Small investors follow them like a cult, so if they split up, investors will love it and the stock will go through the roof." What do you think about the breakup? Are you in favor? Leave a comment below.